Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
Well, it's a big day. It's Fed Day.
Yeah, absolutely.
We got a 25 basis point cut out of the Fed. Before, I want to ask about some of the dissension in the Fed, but also just, was this a dovish cut? Was he yelling at us about hawkishness while cutting? How would you characterize this cut?
A very challenging one. I think you have as much uncertainty about Fed policy as you've had in recent memory. One of the main lines that, stuck out to me today during the press conference was the Fed's policy tools can't do two things at once, right? They can't tackle high inflation and weakening employment at the same time, right? And so the way he characterized it is, our challenges are immense and high level. We need the economy's been, monetary policy has been too restrictive in the context of the labor market data that we've gotten, right? I think any Fed person was surprised by the magnitude of the revisions, right? We had a 910,000 downward revision to the labor market data last week. And yeah, so he's concerned about the labor market weakening. That's partially a function of, layoffs, but also labor supply going down. And so to summarize it, he's reasonably concerned about the labor market, but also concerned about inflation. And he thought that it would be appropriate to cut 25 in that context.
It's so interesting. So the labor market, then, if inflation's still above target, which it is, then the labor market softening or weakening, or it's not fair to say contracting yet, right? But
it's not contracting yet.
But softening, that's the main impetus for the cut then?
Yeah, that is the main impetus for the cut. And one of the things he highlighted about the labor market is, jobs are becoming harder to find. And so if you lose your job, it's going to take you much longer to actually get a job. And so if you get this downward spiral of people losing their jobs, it's going to be harder to, come back from that. I think, if you think about it, like, let's say one of the main reasons that people lose jobs nowadays is because of AI, right? Once somebody takes over, an AI takes over for a job, like, it's going to be really hard to be like, oh, I'm going to hire somebody because I just replaced them with this AI. So, it gets a bit harder.
So it's like the economy could contract a little bit, not literally contract, but slow down a little bit, leading to layoffs. But then when it starts growing again, the growth might come from automation, and the labor market might remain stagnant.
Yeah. And, and the other things he highlighted was that because the labor supply is shrinking, largely due to immigration, the run rate you need to kind of keep us closer to full employment is actually smaller, right? So let's say, a year ago, you might have needed 125,000 jobs per month to keep us at a neutral rate of unemployment. But now you might need like 85,000 or 75,000. And so that number has also come down. And the other thing that is just like so apparent in the data that Powell touched on is kind of the tale of the two halves, right? By halves, it's not even halves anymore. It's really like the top 20% of people and the rest of people, where you see things like, spending amongst top income folks like actually increasing, and their spending power beating, the rate of inflation versus, the rest of, the population, where their purchasing power is net declining or staying flat, right? And you see it in, asset prices as well. Like the S&P is at an all-time high, right? NASDAQ's an all-time high. Property values are at all-time highs. And so there's a huge, divergence between those areas of the population. And Powell specifically highlighted, youth unemployment, starting to tick higher, also unemployment amongst minorities. And the way he characterized it was, the unemployment for vulnerable parts of the population, is something that he is concerned about. And, his mandate is really to help more Americans and all Americans. And so, there's part of him that's like, I want to cut because there's a lot of folks that are in pain. At the same time, like, inflation's an issue. And once the inflation genie gets out of the bottle, it's really hard to put in. And so, he's got a really hard dynamic. And at the same time, as a market participant, it is just so hard to like actually understand where policy is headed, right? Going back to your first question about the
Yeah.
dissent,
Yeah.
right? It's really notable that the most recent Fed appointee, that's also technically employed by the White House right now, was the most aggressive person in terms of their rate
You're
policy.
talking about Steve Mirren,
Mirren,
who
yeah,
just joined as a Fed governor,
yeah,
and he was in favor of 50 basis point cut.
correct.
Right?
But his dot plot
It's even
also
more
for
aggressive.
2025 literally looks like the biggest outlier ever.
It's just
Right,
down with rates.
it's like 100 bips lower than everyone else for the end of 2025,
Right.
and it just doesn't make that much sense. And I think what's notable is that Powell was able to get consensus amongst the rest of the members, right? So 9 of the 10 voting members agreed with Powell, and
For 25 this time.
correct. And but if you start looking beyond, like, the distribution of like dot plot estimates for members is like really wide. And when you think about the fact that Trump is pursuing policies that are essentially going to put more people like Mirren on the board, it's like it's really hard to know like how relevant the dot plot is at all. And then you also have Powell telling you that it's still meeting by meeting, right? And just because the dot plot says that the median dot is forecasting 2 more cuts this year, doesn't mean that they will actually do that.
So you can't rely on this dot plot as much right now.
You can't, but it's just it's just tough,
Yeah.
for a market participant. And I think the stock market isn't the economy, and I think a lot of the market does hinge on people feeling like they're going to have a job for the foreseeable future. And so, like, the labor market is very important to people because, one of the reasons why people feel so comfortable not selling their house is because they have a really good rate, most likely, but also because they forecast themselves being able to make their mortgage payments because they're still employed, right? And so if you start to, lose jobs, particularly on, some of the white collar, higher end jobs because of AI, like, that could have a meaningful, trickle down impact on
housing.
in housing.
That's
right?
fascinating, yeah.
So it's a really interesting set of conditions. And one of the other big things that's been going on in the marketplace basically since Labor Day is you've had the dollar weaken, right? And all this uncertainty around Fed policy and Fed independence, is leaking its way into markets via the dollar, right? And euro was testing 119 and change at some point today, and gold is making a fresh all-time high every single day, right? And so the perception of the U.S. as being run in a sound way from a monetary policy perspective and a fiscal policy perspective is getting challenged by the day.
Right.
And so, it'll be interesting to see how crypto fits in that landscape. I do still believe in the digital gold thesis. However, I'm more inclined to think that the balance of all the data and what I've seen over the past couple of years, that it's more akin to like equities and risk assets than it is to like a true fiat, debasement hedge. And so, I think for crypto, the main thing to watch is probably equity markets, not
Monetary
gold,
policy and
right?
gold,
Because if we were really tracking gold, we would probably be going up a ton right now.
I know. It has lagged Bitcoin, gold in the past, so perhaps a move is still possible. But I mean, I agree. We record this on the 17th of September, so Wednesday, shortly after Jay Powell gave his press conference. Right, Bitcoin's around 115.5. Is that what it says over my shoulder?
Yes.
115.7. Unch, as they say, unchanged on the cut, basically. Briefly a little tiny bit higher, but not really changed. Whereas gold reacting, right? Other things reacting. That some of the now most of this was priced in.
Correct.
Literally, the rates market's what we're pricing 27 bip cut, so it's
Correct.
basically one cut, like they
Exactly.
But I wonder then, with the sort of volatility in the dot plot, maybe call it that, or the widespread in the dot plot, that's gonna. Do you think we're going to see some volatility in rates markets?
I mean, it's totally possible. It's just really hard to gauge right now. I think one thing is clear: there's going to be a ton of issuance.
Yes, yes.
Over time, big beautiful bill, $3+ trillion deficits. There's going to be a ton, but if the balance of risks is really skewed towards easier monetary policy, then that should benefit the bond market. So it's super tricky.
Gotta wait and see.
And that there's so many different levers that the government has to kind of cool the bond market if it ever gets too aggressive. One that comes to mind is obviously going from running off your balance sheet to actually expanding your balance sheet if you're the Fed. The other thing that's been proposed is cutting the rate that the Fed pays to banks to park deposits. So if you cut the interest rate on excess reserves, or IORB, below, like let's say you cut it in half, those dollars would probably find their way into the bond market because they, want
Gotta go
more
somewhere.
yield.
Yeah.
You could change bank regulations around to allow them to, take more risk in the bond curve. So there are things we can do over the next couple of years that kick the can down the road, but the issue ultimately doesn't get solved.
Yeah.
And I would just highlight that there are plenty of economies, particularly in emerging markets, where, unemployment is real bad, and yet inflation's really high, right? And so there is this weird situation you could find yourself in ultimately where, the economy slows and inflation is still kind of lingering.
This is what they call stagflation, right?
Correct.
And it's one of the hardest, as you mentioned before about the Fed, it's one of the hardest things to address because they're fighting a dual purpose. Their dual mandate is pushing them in opposite directions.
Correct.
Which is why you get this. We're worried about the labor market, but we're cutting a little bit, but we're also worried about inflation, so we're not cutting a lot.
Yeah.
And you could see that go the exact opposite way. Well, we're worried about inflation, so we're hiking a little bit, but we're also concerned about unemployment, so we're not hiking a lot. Like it's sort of 6 and 1/2 dozen.
Yeah.
Right. But I think you're right. It feels like it's still long-term a bias towards lower rates over time.
Yeah, no, absolutely. Particularly when that Powell will be out of the Fed. Well, not technically, but he will no longer be chairman halfway through next year.
Next May or so, right?
Yeah, around there.
And so I don't know, how many other appointments does President Trump have during his term?
Well, if he
point?
just arbitrarily fires people for
Well, the Fed Governor Cook was still in the meeting, right? And voted.
No, absolutely.
So we'll see if that even works. If it doesn't work, then we're just looking at like term expiry and what are they, 10-year terms, right?
Very long. Yeah.
So
don't know.
But I agree. I think you mentioned it is notable that the most recent appointee by President Trump is also the most aggressive on being dovish.
Yes, and which makes you really like the crux of like the Fed, at least in my lifetime, has been that they've been an independent arbiter. And that Fed independence, I think, is really critical for, dollar reserve status and confidence in markets. Like if you're a corporation and you are planning your CapEx for the next 4 or 5 years, if you're somebody modeling purchasing an asset and you have to, discount the cash flows, et cetera, like the variability about of the numbers that you're inputting, like have to be higher.
I mean, you have to assume that every person that Trump appoints successfully to the Fed is going to be dovish, right?
Yeah.
And so
a reason, like at least not a hawk.
Yeah.
How about that?
Well, it's going to be exciting. I was hoping for no cut. I thought that would have been the most exciting outcome.
I was
that would
hoping
have stunned
for some volatility.
Yeah,
absolutely.
It was a pretty muted response in general.
It is.
Following the trend and no major difference. So maybe we'll see if that sticks when we talk next week. Beimnet Abebe from Galaxy Trading. Thank you so much.
Thanks for having me.